Hello everyone, this is Teddy Keckstedt from Forex Trading Unlocked, and we are here for a Forex market analysis and crypto market analysis for you for June 23rd. We're going to check out and see how things are going on in the markets. We have some buy signals, some sell signals, and a lot of interesting things going on. Just want to remind you with our disclaimer here that this webinar is for informational and educational purposes only. And if you have not done so already, please subscribe to our YouTube and Twitch channel, Forex Trading Unlocked, and check out the book High Probable Japanese Candlestick Patterns, written by yours truly, available on Amazon.com in paperback and Kindle versions. And we'll go over some of the signals that were triggered just recently. Alright, so we have the Forex-Trading-Unlocked.com website pulled up here for you. We'll go to our market tab here and hit the workstation tab on our navigation bar. We're going to go skip past the numbers. We're going to get rid of this stuff here. Alright, so we have the Euro US dollar, which had a buy signal right here. This is a bullish engulfing line buy signal that was triggered on Monday. Big move. Let's take a look at the dollar index, because the Euro US dollar and the British pound US dollar are the two biggest components of the dollar index. We had a bearish engulfing line sell signal that was triggered on Monday. We had some follow through to the downside here for the dollar index. What does that mean? Well, if we go off of the recent low up to the recent high from 3 sessions ago, let's go to our good old 50% rule and find this little barrier here. And then we'll also go down to 0.618 and find our little correction zone. Alright, so with Fibonacci, we have figured out a nice little retracement area for us to take a look at for the dollar index. If this is the case and we have a retracement back to these levels, well, then you would very likely see the euro and the pound get back to levels where they were just a week ago. So we'll see how this pans out. Right now we do have a bull market in the dollar index just because we have a sell signal. It is a counter trend signal right now. We've had an exacerbated move to the upside. Also, you want to take into account the fact that we've been making higher move highs and higher move lows. We're coming off a higher move high with a big range here to fall back into. So even if we fall back into our target zone here, we would, if we bottom out by this 90.61 level in the dollar index, we are still making a higher move low. So that is very important for us to be mindful of moving forward. So the same thing is in reverse here. We take the recent high in the euro and the low there. We'll go to our 50% rule right here. And we have basically an inverse chart of the dollar index with the euro. Now the euro is the biggest component of the dollar index. A lot of times it looks very familiar and similar to the dollar index chart. So that's one reason why you have these correlations that coincide so well. So we have this bullish engulfing line buy signal here in the Euro US dollar. So right now this currently is in a short-term downtrend, making lower move lows and lower move highs. We're coming off of a lower move low. So let's just say that we actually fall into, or rally up into, excuse me, this upside target zone, and resistance holds up in this area. It would still be a lower move high should we hit that area and then fall back on support again. So we are in a short term and almost intermediate medium term neutral trade for the Euro US dollar. There's a lot of significant things going on in the world right now. I have my suspicions that we have a good chance over the next week and a half of touching up by this $1.2054 area. At $1.2107, I think is going to be a really hard extreme to reach. I think that this is a correction to the upside now that we are working in here. Even if it's a large neutral trade in the long term, we're still on a bearish perspective looking at a sell rally forecast for the Euro US dollars. But right now we do have a buy signal and we are targeting this 120.54 area, which is not the biggest move when all considered, but when you think about our risk factor here, our risk is the low from a few sessions back around 1845. Even if you were to jump in and get long right now, even though our signal was triggered 2 sessions ago, you're risking here, what is it, about 80 pips to make, go from 1927 up to 1054 to make at least 130 pips. So right there, this initial extreme target is somewhat noteworthy. Have a good trade for a contrarian buy signal going against the trend right now. The overall long-term trend, though, however, this could be the higher low after a higher move high in the long-term sense. So the question is has the euro turned, and is it just in an upside correction, or are we finding right now the very big buy point, which will be the lowest low you're going to see for the next few months? So that'll be something to be mindful of. I would follow this little upward sloping support line here that does support the longer term trend. Should we start to fall back onto this area and then obviously take out $1.1845, all bets are off, and this market is in a full-blown bearish way. So we'll see how this pans out. USD, British pound also had a bearish engulfing or bullish engulfing line buy signal triggered on Monday. It fell back a little bit yesterday and Tuesday's trade rather, and now today it's kind of hovering around this little upper area. What is going on with this? Well, it's the same thing. We come off of that high down to this low right here. We're looking for our 50% mark right here for a correction target, and the 0.618 for the upper extreme. Now, do I have any reason to think that this is unlikely that we could reach this area? Well, overall, this market is in a major bull market. We're coming off a higher move high and then a lower move or higher move low right now. So right now, intermediate to long term, this is definitely bullish. I would also use this support trend line right here from these two lows. Any failure from these areas here obviously would be negative. You do not want to be long should we take out this support area of $1.3782. However, where we're at right now, it seems like we do have enough strength to maybe get up to this 140.17 area. I do not expect us to really have a major explosion beyond this area. I think that this is going to pretty much cap any bullishness for the pound US dollar, at least in the short run. Now let's look at the US dollar Swiss. Very, very interesting. We didn't get a sell signal in this one. That's why I'm very leery of what's going on with these other markets and whether or not they may or may not pan out as far as being counter trend trades that can actually become profitable. This US dollar Swiss trade right here, if you take a look at it, we've had an explosive move going into last Friday. Monday we did come back and whatever, we're holding. We're in a holding period here. This is a very questionable spot. If we get above the high from a few sessions back at 92.41, that's very strong for the US dollar. Flight to quality in the Swiss is not happening, and with a lot of things that are going on geopolitically and stuff, you would think that the Swiss would be gaining some strength. I don't know. This is a very questionable thing. This also could be the indicator for the euro and the pound as well. If we have a breach of this high from Friday and we start to make higher move highs for the US dollar Swiss, that probably but does not bode well for the buy signals we have in the euro and the pound. Both of those will probably erode. Just telling you to be mindful of that. All right. So let's just check the chat here. We don't have anybody on the Twitch chat, and we're checking out YouTube. Okay, well, at least we have some friends out there. That's nice. Okay, cool. All right, no questions. US dollar, Japanese yen. Now, this is the thing that really makes me worry about. Can these buy signals in the pound and the euro really pan out? And since the Swiss is not really selling off, or the US dollar Swiss is not selling off, that means the dollar strength is probably going to come back. One of the things that are key right here is that we're hovering right below multi-month highs here with the Japanese yen. Now, if we are back off the coronavirus trade and the pandemic and stuff, and we have free-flowing currencies, then the euro US dollar buy signal and the pound US dollar buy signal should actually be valid. And if that is the case, When you have US dollar weakness in those currencies and we start to actually get back to free-flowing market mechanisms, US dollar yen most likely will pierce this level at 111.0 even, basically taking out multi-month highs, and start to accelerate a rally that targets up to upwards of 112.5 to 113 even, at least in the short run, let alone the intermediate term. And this would be coupled by the fact that we have a weakness in the dollar versus the pound, the euro, and the Swiss, and a couple other markets. If that is the case, if that is not the case, then we may struggle to see new highs in the US dollar yen. We may be just buffering up against the upper part of a range that we have basically settled into over the past few months. So this is really what we're looking at, is going from March to now that we're buffering up this upper part. If we fail to break out, or we just pierce it a little bit and fall back into this range, well then, guess what? We're looking at more sideways action. The slope of this upward trend for the US dollar yen, which is definitely an uptrend, up higher move highs and higher move lows, it is consistently maintaining this trend, not very aggressively, but it is there. So we'll see what happens. I would key off of especially this last recent higher move low here around 109.72. Any failure from here definitely puts this market on neutral, not necessarily bearish, but it definitely would have us coming below this upward sloping support line. It would have us taking out this higher move low. Two indicators that that are not lagging that would definitely give us a heads up that we are likely going to digest somewhere in this range. It does not mean that we are going to fail from this area here around 107.68 here. If we fell from here, below here, that would be definitely very bearish, especially if we do not pierce and make a higher move high up here. And even if we do make a higher move high and then slam down to this 107 area, that would put us on the definitely change in trend forecast for the US dollar JPY. All right, Australian dollar, US dollar. This is a very interesting currency that it doesn't have a buy signal. It fell through the bottom over the last few sessions last week. It did bounce since Monday. With everything that's going on geopolitically, and especially with China, and as far as the raw demand for commodities and what they are, basically the sanctions they're imposing on Australia, which makes no sense, and trying to inhibit them. These are things that are going to wane with Australian dollar as far as their commodity efforts. It doesn't matter how high prices go. In fact, it actually help fuel more inflation. But China had big orders and was bringing back Australia over the past few months by them getting their commodities shipped over to China, which is their major purchaser for their raw commodities. But now, last week, China announced that they are now going into their reserves to help try and curb inflation, meaning that their economics, if you will, are failing, so they have to rely on stockpiles that they've been holding for years to curb the cost, just so they can keep their profit margins in. That's the one nice thing about communism. Communism is that economics never add up, no matter what they do. So when it comes to stresses, they continue to make the wrong moves, which now has global implications, especially when it comes to a country like Australia. We learned from the pandemic how supply chains have disrupted the economies of the world besides the health factors. Now we have issues with supply chains once again where they're coming back online, and when you have restrictions going on in China, then other countries that have no outlets, now they have nowhere to go. So that is going to be probably negative the Australian dollar, US dollar for the short run and even intermediate run. We'll see how the next few months pan out, but geopolitically, and especially what's happened over the past few weeks, even with inflation and commodities, Australian dollar is not looking well. If you look at this in the longer term, we are keeping a downward trend, a very mild slope after having rallied for a year. We may have topped out in the end of February there. We came down, we made this lower move low, a lower move high, and now we've made a lower move low, confirming that no matter what, this is a neutral to bearish trend. I would continue to monitor this and also be very mindful of selling into rallies right now and try and be very careful about buying into breaks. I think this is not a buy signal here, but I think we are set up for a short-term correction to the upside. As far as an extreme, we use the 50% rule. Once again, this is the most that I really think is going to happen. I don't think the 0.618 is actually relevant for this, but we'll see how this goes. And also, if you look at it, where this upside support resistance target is, this starts to come into this downward sloping resistance here. Could it pierce this? Absolutely it could, especially by attrition if we have a big rally soon. However, the longer it takes to manifest, the more unlikely we are going to hit this upside target right up here. So let's take a look at the New Zealand dollar, US dollar now. All right, oops, wrong. New Zealand dollar, excuse me. All right, New Zealand dollar, US dollar, very similar chart to the Australian dollar, basically faring on the same things. I would be very mindful of it. I don't really see any major bullishness here. I think we have a correction once again that you can base off the most recent high and the most recent low. Target the 50% level. I don't even think you're going to get much more than that, but then the 0.618 I think would be the extreme. One thing to know though is that New Zealand, unlike Australia, doesn't have the pressures with China as much. They supply to more countries. They're not basically just focused on China, and they've also ridden the pandemic much better than most places in the world also because of their isolation, just because it's an island to begin with. So it's very possible we could hit this 71.20, 71.67 I think is definitely the extreme. This one more likely than the Australian may hit that, but you can see normally, from the chart here, we are still in a longer term neutral to bearish trend. We're looking for a sell rally forecast. This area right here is where I think you're going to run out of gas. All right, US dollar Canada. This has had an explosion to the upside, guys. It's pretty amazing. We were talking about a rounding out bottom, and then last week after the Fed meeting, boom. But here's another thing. We always talk about this and remind people markets come in, go out like they come in. So we've exploded over the last few sessions last week. Very likely that we will have at least somewhat of a correction. And this one doesn't have quite the move like the other currencies have had, and we're almost on that 50% area. So let's just say that after this bear market that we've been in for since 2020, this goes all the way back to February of, all right, here we go. I'm sorry, March 19th of 2020, $1.46 for the US dollar Canada. And la-di-da-di-da, 146. Let's go to here recently where we're at. All right, 146, $1.46. And here we have a low of $1.2006. So basically 46 dollars or basis cents or basis dollars in the US dollar Canada over the course of the past that was in excuse me, March, a year and 3 months. That's a very big bear market. Is this just an upside correction? Well, if you look at it on a symmetrical scale, this is the biggest upside correction that we've had pretty much in, let's see, this one here was, let's see, $1.29 to $1.34. That's a $5 correction. That was the biggest one. This is $1.20 to $1.25. So the biggest correction we've had in over 6 months. Everything else has been much tighter with about usually only $2.50, possibly $3 on the extreme. So if this is really starting to turn the market, then right now in this little support band here, this is where we're looking for the market to bounce. This is not a sell signal here either. It is a turn. It's a short-term high, and it's like we said, markets go out like they come in. If that's the case, it's very likely that we will come back into this area first, maybe digest the trade a little bit, and then get a bounce and start moving higher. That is very likely, especially if we start to really see US dollar strength. Now, here's something that I want you to be mindful of. Remember that when you are looking at currency markets, always watch the interest rate markets. And this is for all other currencies. You don't have to just watch the 30-year bond market in the United States or the 10-year note. If you're trading the euro, you watch the Babel and the DAX, or excuse me, the Bund rather. These are things that definitely influence the currency pricing. So, Treasury bond futures, very interesting what has happened over the past few sessions. On Friday, we had a monster range. Now, why am I talking about Treasury bonds right now? Well, interest rates are a function of currency pricing. When bond prices go up, interest rates go down. There's an inverse relationship. So when interest rates go up, bond prices are going down. That also means that you have strength in that underlying currency. So we had on Friday where the dollar was spiking and then reversing. We had the bond market that's had this range here of the low was $159.21 ticks, and the high was 163.02. So for those of you that are not familiar with Treasury bond futures, there's 32 ticks, not pips, they call them ticks in the futures, per basis point, per dollar. So we had a range with a high of 163.02 and a low of 159.21. So right there, that is a $3 and what is it? 11, 12, 13, 14. $3.14 tick range. So that's 32 times the 3 plus the other ticks that I'm talking about. That's without any major Fed news or anything like that. For us to have a move like that, we spiked a higher move high. This is a sell signal in the bonds. However, if you have a sell signal in the bonds, that means you would also have a sell signal in the dollar. So if that's true, and right now the bond market and the 10-year market are definitely trying to figure out what's going on here, that sets us up for this little correction down into this area here. If the bonds really do have a sell signal that is valid there, especially with that kind of range, and I've been trading the Treasury bonds for over 30 years, you just don't have $3.50 ranges in the bonds, especially with no news or any major world events or whatever. That is just a tremendous range. And just to give you an idea of what I'm talking about, the range for that on a typical day is 16 to 28 ticks or pips. So to have something where you're talking about 4 to 5, 6 times that range, that's insane, especially when it does influence currency pricing. So US dollar Canada, I think like those other ones, we're looking for these target areas to be our extreme. Now let's look at our cryptocurrency stuff. So Bitcoin, definitely everyone's been talking about this on a daily basis. We had a low today on June 22nd. Now it's, well, actually the 23rd for the Bitcoin market. So we hit a low of 28,600. We're now back at 33,000. We continue to make lower move lows after lower move highs, which is indicative of what? A bear trend. Do we have a buy signal here? Absolutely not. Kind of from yesterday, we have a short-term counter trend, very weak buy signal. But when I say very weak, that means that I'm looking for at the most we can get a correction from here to we're almost there. Okay. So right here around 34,980 and we're at 38,800. So another $1,000 and we're pretty much right there. This is very interesting. I want you to watch this today. If this market holds pretty much in this area and doesn't get above this too much, and over the next, and then tomorrow, if we also, not Wednesday, Thursday, because tomorrow is Wednesday, but on Thursday, if we have a 3-day rally off of this low from Tuesday, and then we turn around on Friday, especially if we come back down towards this 30,000 mark or back towards new lows, that would be a very negative sell signal for the Bitcoin market. Now, the Bitcoin Bitcoin US dollar is almost like the dollar index when it comes to the cryptocurrencies. Interestingly enough, in the Ethereum market shaping up, we have potentially a very weak short-term buy signal. Now, interestingly enough, is that we did spike a lower move low in Ethereum. This market is in a short-term and intermediate bear market. Are we calling for a bottom? Absolutely not. Are we calling for a potential counter trend trade? Maybe. We'll see how tomorrow, this is Tuesday night into Wednesday, how that shapes up, and then into Thursday. Very possible we get a nice little boost to the upside, a little correction. However, I'd be very mindful of the fact that unless we get above this 22,653 area, basically from this recent lower move high, unless we get above there, we are going to continue to try and test support. So that's what we're looking at with Ethereum. Now let's look at Monero. This has a very similar chart to Ethereum. This one also is looking to try and set a bottom. Now here's the interesting thing. We have divergence. This did not set a lower move low like Ethereum did. So we have divergence. So it's very possible that maybe Monero, because of its technology factor and usability and also the price point, that this one may be starting to stabilize. It's something to really pay attention to. So we'll see how that pans out, and I think that that one might be the one to, if you're holding on to it, that you may not take as much heat as you will with the other ones. Dogecoin, this one here, look at how this one got all the way back down to what we got. This DOGEUSD, I'm sorry, wrong one. DOGEUSD. Oops. USD. There we go. All right, Dogecoin. Very interesting what's shaping up here. Yesterday, on Tuesday, excuse me, which is today, we had a Harami buy. We have a short-term buy signal in Dogecoin. Isn't that interesting? We have Bitcoin that's falling apart, Ethereum that's looking bearish, Monero that's looking like it might want to maybe stabilize, if you will. We have a very weak short-term buy signal in Dogecoin. So key off of the Tuesday low of around 16 cents. Anything below here is definitely bearish. However, above this, and especially if Wednesday's trade settles positive, that would be a short-term buy signal. We would have a 3 inside up buy signal. It is forming. It has not happened yet. Do not jump in front of this. I've seen this happen so many times before. It's a bad movie. Right now it looks good. You want to jump in front of that trade and get long. Guess what? By tomorrow night, we are below here and we're making new lows and we're heading below $16 down to 15, 14 cents. So do not try and forecast a signal that has not occurred yet. Right now, it is shaping up, it is forming, but unless it was settling right here, right now, tomorrow, we do not have a buy signal. So very interesting. We'll see how that does pan out. Oops. All right, let's get to the EURUSD and see what's happened since we were talking. All right, since we've been talking so far in this webinar, we are a little bit slightly lower than we started off this webinar with the Euro-US dollar. So we will see how this trade shapes out. Once again, we are looking for these counter trend trades to manifest a decent correction over the next probably 3 to 10 days. Depending on the volatility, which considering how we came in, remember, we once again, to reiterate, markets go out like they come in. So this had a very steep decline over the last few sessions. So over the next 3 to 6 days, to rally back up into this area as a corrective area and then stop and then fall back on support. Very, very probable. We'll see how things shape up. It doesn't look like we have any questions here in the chat rooms on YouTube or Twitch. So just want to remind you once again to tell all your friends about Forex Trading Unlocked on YouTube and Twitch. Please subscribe, like, and send it off our videos to your friends in the trading community. And check out the book High Probable Japanese Candlestick Patterns, available on Amazon.com in paperback and Kindle versions. With this book, if you're an Amazon Prime member, you can check it out for free. Just read it, and it's all part of your monthly subscription. And you can use these signals to incorporate into all your trading, whether you're an options trader, Forex trader, futures trader, stock trader. It doesn't matter what trader you are. These signals work in all kinds of markets. You just have to know how to apply them properly. So we've pointed out some of these signals today, and we look forward to seeing how they manifest and see what happens moving forward over the next couple trading sessions. And with that, I'm Teddy Keckstedt from Forex Trading Unlocked. I want to thank